the question of repositioning the portfolio is coming up towards the end of the year. I think this is a very particular year with a performance of massive outperformance that we have. We have a very different positioning than the beginning of the year. So we will have to think about certain positions and how we want to position ourselves. So this is a very important part of fund management, and I want to talk about this in this episode. This is the Not Even Wrong podcast. It's December 4th, 2020. This is Krim Delco. Since the last update, the fund is up 10%. The market's up 0.5%. We're up 335.5% for the year. The market's up 14. We're outperforming by 321.5%. If you put $100 in Orange Capital Partners on January 1st, 2020, you would have $435.5 today and $114 in the S&P if you did the same thing. So the repositioning of the portfolio, given that we have a performance from in the realm of 335%, that means that our portfolio is up by 4x. So $100 turned into 400 and something dollars. And it's mainly driven by Tesla. Tesla has contributed roughly 290% of that performance, and 40% comes from the Crispr Index. So what that has done is it has changed the composition of the portfolio. Tesla is now a very large part of the portfolio. The Crispr Index are relatively small. Microsoft, RTX, and Intel, the other positions we have, are almost not visible at this point from a size perspective. So the question now comes up, okay, what do we do towards the end of the year? By the way, it is not necessary to reposition yourself at the end of the year, just to be clear about that. This doesn't mean that because it's the end of the year, you have to reposition yourself. But a lot of things in fund management, when it comes to timing, they can be looked at in two types of ways. One is you have discretion over timing and use timing as a degree of freedom, or you don't have discretion over timing and use timing as a non-degree of freedom. What that means in plain English is if you have a view on timing, if you have an edge, if part of your strategy, if your principal stack includes strategies to make money with timing, then timing is a discretionary factor, degree of freedom that you have in your fund, and therefore it is part like choosing which investments, choosing the size of your investments. Those are the kinds of things that you do as a fund. And I've discussed this in a previous episode, that the degrees of freedom that we have as fund managers actually reduce a lot. In our case, actually, it's only one, which is what do we actually invest in? That's the only degree of freedom we have. We have some degree of freedom in portfolio allocation, which actually I didn't discuss in that episode. I think it was a few months ago that I recorded this episode. So I just want to mention here that we do, of course, have also the ability to not just decide what we're investing in, but also how much of our capital is invested in X versus Y. So that is certainly a degree of freedom. Although, like I discussed in that particular episode, when it really comes down, we need to be very highly concentrated. So we have some degree of freedom in terms of how big we want to go. But then in the end, because we want to be concentrated, we end up having very few positions, and therefore each size is kind of determined by just by math. If you have 3 positions, you have a 33% position in each stock if you want to be fully invested. So let's get back to the repositioning of the portfolio. So we have about, as we speak, as of today, NAV adjusted. So meaning as of today's NAV, we have 80% in Tesla. We have 17% in the Crispr Index. We have 4.5% in Microsoft, and the RTX and Intel options together are about 2%. So we have barely any leverage in the fund right now, and that's fine. We will probably add some leverage. Given the low interest rates, I think that's a prudent thing to do. We are also contemplating 2 strategies going forward. We don't want to sell Tesla, so we will stay 80% invested in Tesla as of NAV. the question now is, what do we do with the rest? We have roughly, I think we are going to choose 10% leverage. So we will have another 30% of assets at our disposal. So just for simplicity, if you have $100, $80 are in Tesla. So you have another $30 that you can adjust. We have $17 as of today in the Crispr Index, and that leaves us with another $13 of discretion. And what I think will happen, and that's this is now I'm thinking out loud. We're still having those meetings. The thought process is still not fully finished, but I think what we're going to do is we're going to add 30% CRISPR, 80% Tesla, and that's going to be it. So we're going to sell Microsoft. We're going to keep RTX and Intel options, but we're not going to increase. Now, there is a discussion to increase some of the RTX options because the vaccine could lead to a sharp rebound in travel. That is a possibility. RTX is driven by travel. It's a company that has two businesses, travel and defense, and we believe that the defense side is fine. The travel side is, of course, suffering tremendously right now, and there is a good chance that there could be a rebound. So we might add 1 or 2% on the option side there. But what we're really excited about is the CRISPR index. And the reason we like CRISPR is actually one of our recent episodes has been about the disruptive effect of twist bioscience and also the massive disruption of AlphaFold and the solution to the protein folding problem, which we believe opens up a new value chain in pharmaceutical and agricultural research, which is a direct path from genetics to function. And that is sort of an extension of the fundamental paradigm of biotech, which is DNA, RNA, protein. And now we have DNA, RNA, protein folding function. So we have DNA to function in one shot. We can determine, at least that's what we believe we can, given that AlphaFold has solved the protein folding problem, we can determine the amino acid structure of a protein through the DNA. And then we can, from there, with AlphaFold's technology, determine the function. So we have a direct line between DNA and function, back and forth, by the way. So that way we can find, for example, if there's a malfunction of a protein, we can find out why that malfunction might be happening and which gene could be causing that malfunction. The same way we can then also, by gene manipulation, figure out which gene does the which function. So there's a tremendous amount of research that we believe is just opening up now. And of course, like many technologies, they are always overestimated in the short term and underestimated in the long term. And I think this is one of those where no question that this will happen, that we will probably get too excited and overestimate things in the short term, but in the long term, we will underestimate the impact of this technology. The same way, for example, we underestimated the impact of artificial intelligence, even though there was a lot of hype. In fact, we believe that the impact of artificial intelligence on our lives is increasing exponentially day by day, and there's a power law here, and we are 10 years from now just going to look back and say, how could we not see all these things coming? So the same way, this is going to be even more massive. So then the question is, okay, why do you want to start increasing your positions now in the CRISPR index? Well, the CRISPR index is the best thing we have towards the new area of genetics. It's not the perfect investment strategy in a sense that the companies that are public, CRISPR Therapeutics, Intellia, Editas, Beam Therapeutics, Twist Bioscience, Illumina, the stocks that we own in our CRISPR index, they're not the holy grail of gene manipulation. They're not the holy grail of gene editing. They're certainly not the solution to this new area of gene to function pharmaceuticals and biosciences. But it's the best we have. The expertise and the innovation stack, which is built around gene editing in those companies, is unprecedented. Nobody else has at least that scale. There might be startups here and there that do certain things better, maybe even disrupt them, meaning those that we own. But it's the best we have right now. I think the market cap of all these companies, even now after the index has more than doubled since we bought them, is still tiny given the potential. So, if we have stocks like Snowflake, which is a data warehousing company with 100 billion market cap, NVIDIA with a 400, 500 billion market cap. If we have stocks like that in computer science and computer and software and data management, well, then this is 10-100x. The potential in biotech, biology, life sciences is so much more bigger than the potential in computer science. That we believe it's only a matter of time till that index takes off. So that's why we want to increase our position. Again, we don't want to sell Tesla. That is, I think, a psychological barrier, if not even more. But we want to focus more on the Crispr Index. We want to be even more focused than we are today. There are some issues with Microsoft. I think also the competitive landscape is changing a bit. That's why we will get out. Microsoft has been okay for us. It's contributed about 4.5% to the portfolio as of beginning of year NAV. So, which means it's really not done nothing compared to what other stocks have done. And there's a good reason for that. I think Microsoft is in a competitive landscape right now that is not perfect. You have Apple disrupting the Windows chip, Wintel dominance still of personal computing. You have Snowflake and stocks like that, Palantir, CRM buying Slack, pushing into enterprise software. There are issues with Microsoft. That's why we think we will abandon that stock. As I said, RTX, we might increase the options. I don't think we will do the same with Intel. It is tempting. I think Intel is misunderstood. Intel is, for many reasons, in a disruptive situation, being disrupted by others. But I think Intel has enough firepower to withstand that and at least behave like a regular company and not be a laggard to the stock market like it is now. So we will keep those options. We will increase the Crispr Index and keep the Tesla. So most likely, as of the beginning of next year, we will have an 80% position in Tesla, 30% position in the Crispr Index. This is, as of now, it might change the portfolio allocation that we're targeting for next year. Thank you.